It's strange when I start off a video laughing, but it almost is laughable. I have a lots of stuff to cover with you. This is my post-market wrap-up on this Black Monday. This was a Black Monday. I'm laughing again. March 9th, 2020. People, stocks got hammered. The Dow Jones Industrial Average fell over 2,000 points. 2,000. And according to the largest bank on the planet by assets, JP Morgan, it's not over. JP Morgan put out a statement to their investors to sell into strength. I would have to say that is sound wisdom here in this environment. We did have one saving grace. I'll talk about that in a moment. Crude oil got decimated. Along with crude oil, again, no surprise to you if you follow this blog, the energy sector got decimated, and the financial sector, the banks, got destroyed. And you know why. This seems to be some kind of a big surprise. People don't understand, I guess the average guy, the average girl, even those on the financial channels don't seem to understand that the investment banks are heavily invested and highly leveraged in crude. So when you have crude at $31 a barrel dropping, 25%? That's going to put a world of hurt on the banks. But they're going to be getting a safety line from the Fed. I want to talk more about that. So the saving grace today, we had one, believe it or not. The yield curve, I'm not going to say it stabilized because it didn't, but the 10-year yield did come up from the low, and so did the 30. Let me check this in real time for you. The 30-year is now above 1%, and the 10-year 0.59, a big gain in yield off the low. If it were not for that, stocks would have lost another 1,000 points. And maybe this is what, it's not just JP Morgan. It's not just JP Morgan. Other Wall Street banks are doing the same thing. They're sending out notifications to their clients, especially the high dollar, high net worth clients, to sell into strength. So come on, what's the message here? They believe stocks are going down from here. Now, again, you're going to hear, it's amazing, it's astonishing to me how we go from it's the coronavirus hitting the markets, everything is dropping from the coronavirus, to now, oh no, it's crude oil. Crude oil is smashing the stock markets, it's doing this and it's doing that. Look, it's not even a syllable, an utterance with regard to the multiple bubble market that we have and our fake, propped up, debt, hyperinflated economy that is in free fall. It is in absolute free. No, it was or may still be coronavirus, but it's crude oil now, and it's the collapsing yield curve. But you knew all that before. Look, they'll never blame the bubble market, the hyper market of debt that we have. It's unbelievable. They will never blame the Federal Reserve. They will never blame the inept, inadequate, and completely brainless leadership that we have here, not just in the United States, but around the world. It's being run by madmen who are frankly hell-bent on helping their central bank issue in the final solution. Now let's talk about this, the banks again here. There's a lot of talk out here that the banks are going to get yet another lifeline from the Federal Reserve. We already know they're going to be recapitalized. All right, that is a lock 100%. You're providing the funds. You are on the hook for those funds. You understand that. I hope you do. Again, industries are going to get bailed out. The travel industry, they continue to talk about it. Airlines, big pharma is probably going to get a bailout here because now apparently they're going to have a hard time bringing new drugs online because of the coronavirus. So they have to be bailed out too. And you're going to provide the funds. I hope you're happy about that, honestly. So the story is pretty straightforward here. The banks will get a lifeline at your expense. Other industries are going to get bailed out at your expense. I thought this is supposed to be a capitalistic society or market. No. It's a kleptocracy hell-bent on socialism, which is pretty damn incredible, if you ask me. But again, there's something much deeper here, and you all know what it is. It's the central banks who are issuing their final solution right in. You know what it is. They want to be the lenders and buyers of last resort, but they're sucking it from you, right from your skull. That's where they're sucking it from, which makes you the borrower. You. And for those of you that lost money today, I did not. I have the bad news to tell you that your capital got transferred. Just got transferred to other people who are probably very happy right now that they did good on your back off of your hard work. And according to JP let's just use that one bank because it's a mega bank, we're not done. Now, with that said here, nothing goes down in a straight line, although this market's been going pretty much down in a straight line. We had one day, maybe two, where we had bounce. We had, I think, a 1,300 point bounce at one point. Well, obviously, we've given all that back and then some. Then we had maybe another couple of hundred points. It's not looking good to me here. And the fact that we have Wall Street pretty much on its knees right now begging for more debt, and they're going to get it, should really put, the icing on the cake here for you so you can understand what's going on and how it's going to play out, because it's going on right now, right in your freaking face. An unbelievable amount of debt is going to be flooded into this market. The Fed already vastly increased its repo operations. 115 billion today, something along those lines. It'll be a repeat performance tomorrow. The banks are going to get more capital. Industries will get more capital. You're going to get nothing. You're going to lose, just like you lost today if you have any positions on the long side of this market that are not hedged. It's designed to do this to you. Don't you understand that? I hope you do. And even with that said, if you are still stuck in an investment vehicle of any kind that only makes cash when the stock market goes up, you're in a bubble investment. It's a bubble. What happens to bubbles? They burst. What are you going to be left holding? The bag of dog shit. That is a guarantee. So you better get with the program here. Cryptocurrencies got hit across the board today. Silver fell 2%. Gold put on a fractional gain. No surprise to you. I told you this was going to happen, and it may play out even more dramatically if the stock market continues its downward spiral. And let's go back to JP. They don't see an end in sight at this particular time. So look, again, if you have followed my work, you'll probably be laughing at all this because you knew it was coming. You're already in the right spots. I could not be prouder to say that. I'm sitting as pretty can possibly be personally. But again, the masses are being set up. They're being led to the slaughter as they do every single time, over and over and over again. And then they sit there and weep. Well, what happened? Why didn't anybody tell us But that's what they do. Am I making it up? No, I'm not making it up. This is what they do. And they walk around blind. Oh, I didn't see that coming. Really? Oh, well, were you paying any attention at all? I doubt it. All right, look, so in summary, stocks got freaking destroyed. The entire energy sector got destroyed. Financial destroyed. Crude oil crashed. This 2,000 point sell-off in the Dow could have been much worse. Could have been much worse if the 10-year yield would have cratered further, or the 30-year, or a combination of the two. The entire yield curve still remains a disaster area. The yield curve is a freaking horror show of epic proportions. And again, I think this is what JP Morgan is looking at as well, because that's what I'm looking at. JP Morgan, one of the banks that wanted to hire me. So I guess we're looking at the same things. So, all right, well, so with that said, people, just for my lions out here, trade the market you have. Tread carefully, but trade the market you have. For those of you that are not traders, you need to be holding a hard asset here. You need to finish watching this video, and you need to start, taking advantage of the prices right now of silver, gold, even cryptocurrencies, although it's not a hard asset. However, it is a non-central bank issued mode of transaction. You own them, okay? The dollars that you have from the Fed, you do not own them. There is the difference, all right? So anyway, I know a lot of people out here don't like cryptocurrencies. I happen to like them. I own pretty much all the majors. Just stock silver. If you had to pick one thing, what's Greg Mannarino's favorite asset? I can hear all of you. I can hear it. Yeah, it's silver. Physical silver. That's my favorite asset of all time, period. That's it. Anyway, so that's where we're at. Let's see what kind of lifeline the Federal Reserve decides to throw to the markets, to the banks. It's coming. Negative rates, more debt, and it's all wrong. It's all wrong. Unless, of course, the president and the Fed are working in tandem to bring them right to the top of that pyramid, which is what they're doing. The Fed's there now. They're at the top. It's just a matter of time before they exterminate whatever's left of the middle class. And if you are in the middle class, you have a big, fat, ugly target, not on your back, right on your face. I want you to think about that. Look in the mirror. After this video, you're going to see a big, fat, ugly target right there. That's where it is. You are the target of the central banks who are relying on their respective leaders. No, they lead, but in this case, it would be Donald Trump. And it would not change under a Democrat whatsoever to pretty much finish you off. That's what they're looking to do. All right, with that said, I'm out of here. Love you a lot. Please share the video. See you in the morning.